First, we have Dr. John Crumpton. He is the county manager in Lee County. Next, we have Jeremy Carter in the middle. Jeremy is the managing director for Municipal Financial Advisors, DEC and Associates in Charlotte, North Carolina. And last, we've got Dan Danieley. He's the executive director at the Burlington-Alamance Airport Authority. Thank you, Dan. And on camera, who's unable to make it today, he's stuck up in New York City, is Cory Czyzewski. He's the managing director of public finance, investment banking at Bank of America Securities, Inc., up in New York City. We've had the pleasure of working directly with Cory and Jeremy on a number of large transactions, placing about $400 million worth of airport revenue bonds this year, and Cory and Jeremy were both instrumental in helping us be able to accomplish that. So good morning, Cory. Cory, can you hear us? Okay, good. We got you, Cory. Yeah. Great. So before we get kicked off here and we invite our panelists to do what they do and share their good stories, can we pull up the questions? Hopefully most of you all were able to access this. So we're just going to play a little game, just test your knowledge on North Carolina. So as many of you know, obviously North Carolina is reliant upon its airport system to produce much of the gross domestic product here in the state. Our state's got 72 airports, 10 of which are commercial service airports. So North Carolina airports connect North Carolina to the world and contribute over $60 billion in annual economic impact each year. What percentage of the North Carolina gross domestic product is represented by the NC airport economic output? And hopefully we see the results popping up. So our friends at North Carolina State and ETRI, who help us pull together the state annual economic impact study, were instrumental in helping me come up with this question. Okay, so it looks like most of you all have the answer right. It is 10%. So 10% of the state's entire gross domestic product is reliant upon you all. I think a real strong testament to the strength and the importance of airports here in the state. Okay, number two. Flight plans filed for the state's 72 airports were reduced by how much from 2019 to FY 2020? 18%, 24, 32, or 40? Yep, not surprising. People are going a little conservative on the 40%. And the answer, however, is actually 24%. So over from 19 to 20, when we're looking at the impacts of the pandemic, North Carolina was absolutely impacted. We can see that in the numbers. Thankfully, we were impacted much less than many other states across the country. I think that really speaks to the resiliency of the North Carolina state economy and the strength of our airports. Number three, take a broader look here. Current global seat capacity of 78.6 million seats is what percentage down from the pre-pandemic levels? So we're talking about global seat capacity on commercial carriers specifically. Was it down 15%, 51, 26, or 38? So global seat capacity is down 26% from pre-pandemic levels. And really what we're seeing even today, I mean, just looking at Charlotte specifically, we are literally where we were in 2019. So some might suggest that we are fully recovered. I'm a little bit more conservative. Think that, there's still some uncertainty hanging out there, of course, with the Delta variant. And then we're also carefully monitoring what's happening with business travelers. So that's something we're keeping an eye on. Last question we've got for you this morning. 2021 year-to-date capital market airport issuance is up what percentage compared to 2020? And this is year-to-date. So this is the total amount of airport revenue bonds being issued to support airport capital development across the country. 26, 88, 158, or 262%. Oh, fantastic. Thank you all, by the way, for your participation in this. The answer is 262%. It just shows really, I think, the demand, the pent-up demand that existed during the pandemic as a lot of airports put their capital programs on hold temporarily, and then when trying to jump back into the game, need access to capital, and have to go out and undertake some borrowings. So again, thank you for that short little icebreaker. I appreciate that. I certainly learned a couple trivia facts myself as I was researching this. But this last question really is a perfect segue for our first panelist, Cory Czyzewski with Bank of America. Cory, we'll just get this kicked off with you from a national perspective. If you could just take a moment and share with us your thoughts on the challenges that airports had in accessing the capital markets in the beginning of 2000, and what are you seeing today?
Great, thanks, Mike. Hopefully you can hear me okay. Wanted to apologize for not being able to be there in person. To speak with you today. As Mike said, everyone is well aware that during the onset of COVID, obviously people stopped traveling, the planes stopped flying. But what happened in the capital markets? And we saw a similar trend at the onset of the pandemic, that the airport transactions in the beginning of 2020 were really put on pause. During the spring, you saw 3 months or so where there were no capital market transactions. A lot of airport issuers accessed the bank market for near-term liquidity needs. And Jeremy will touch on that a little more in terms of the bank market for airport issuers. But we did see in the summer of 2020, capital market deals start to return. And these were largely refunding transactions from a handful of large hub airports that were using it to create some near-term debt service relief and future flexibility, not knowing how long the employment recovery would last. We started to see in late 2020 and early 21 some new money transactions come back to the market. So during the early stages of the pandemic, a lot of airports deferred or delayed capital plans just given the uncertainty, but we started to see issuers and a broader range of airports enter the market for new money needs as well as for funding. So it was a positive sign going into this year. As Mike pointed out during the icebreaker, obviously the current year-to-date issuance is up significantly compared to 2020. And the interesting part is we're actually tracking 2019 levels, which was a big year for airport issuance. So we've kind of come full circle in terms of market access and issuance for airports. But while issuance had picked up, what happened to pricing levels? So at the onset of the pandemic, just to put this in perspective, 10-year AMT credit spreads for airports were up over 100 basis points. That's more than double what we saw pre-pandemic. A shout out to Mike here, actually, which Charlotte Airport, their 2021 deal still holds the record for the tightest 10-year AMT spread at 38 basis points. So a big compression from where we saw those were 100 and at 38, and that record still holds today. I hear, Mike, though, you had a great FA and underwriter on that transaction that kind of helped set that record that still stands. Aside from market supply and pricing levels, there were also other fundamental changes that we saw in the airport market. And those were really centered around the credit rating agencies and investors. Each rating agency kind of took its own view in terms of the recovery that we would see in the pandemic. And some had more of a knee-jerk reaction with just downgrading or changing the outlook for the entire sector, where others were a little more methodical. But I think as of late, you've seen all of them kind of realign a little more in terms of expecting a near-term recovery of employments to 2019 levels over the next couple of years. So it's good to see from their side that we're having some comfort in terms of the return, and I think it's a testament to the essentiality of the aviation sector and the airport market. Let's flip to the investor side. So investors, obviously, there was a heightened sense of due diligence from their side in wanting to better understand, each of these individual credits. So we saw for transactions that were coming into the market, a lot of investor one-on-one calls. So investors would want to speak with the CFOs of the airports to get a better understanding, and their focus was really on near-term liquidity, the use of federal funds, what additional levers an airport would have to defer a capital plan to kind of make any changes necessary given a potentially prolonged employment recovery. And the other thing that we've seen from an investor standpoint is increased transparency for investors. So what you're including in a preliminary offering statement, so the offering document that you go out when you're pricing a transaction, included a lot more information than we saw pre-pandemic. It was monthly operating data, it was on liquidity, it was on forward projections in terms of enplanements, debt service, revenues, coverage, and those types of things. And I think that that's something that's going to kind of be the norm and going to, really stick around and be something that we see going forward. The other thing is too, we've seen a lot of airports voluntarily post disclosure notices on EMA. So it's another way to just have increased transparency in terms of talking to investors, letting them know what's going on. So I think, I want to keep this brief so we can get back to the others, but I think the key takeaways are that, the capital markets and the bank markets are very much open. While we had a short-term period where there wasn't really market access, I think that even during these unprecedented times, we've seen the resilience of the sector and the strong investor demand and appetite for airport credits, and good time to be in the market. So Mike, maybe I'll pause there and turn it back over to you.
Cory. So yeah, Cory and his team were absolutely instrumental in helping us access the markets. Anybody who's had the pleasure or displeasure of having to go through Charlotte and witness all the construction, really takes a lot of hard work on our part to try to make sure we're able to access the capital markets and keep those projects rolling. So Cory, thank you. That's a lot of great information there. Now we're going to kind of shift gears a little bit. Jeremy Carter with DEC Associates, also in Charlotte. So Jeremy, North Carolina municipalities are not immune to the impacts of the pandemic on our local economies and our ability to access capital. Can you share some perspective on the unique challenges faced by North Carolina municipalities, and what are you seeing now?
Well, first, let me say thank you, Mike, and to the organizers and the participants for having me today. So I appreciate that. The last year has been, or a little more than a year, has been tough on everyone. Not just the aviation arena, but across the state in municipalities, counties, all the rest. So it's been a tough year. And, we're all hoping that it's getting better. I think there's, a lot of fear in the market right now about what the variants could do, and that's still kind of an open item, and hopefully won't come to fruition. But we've seen a great deal happen across the state, not just in aviation. While we were lucky to get some positive sales tax numbers in many areas of North Carolina during the pandemic, which was helpful for many. People were at home, they were spending money, they were renovating their homes, they were doing those things. So that was a positive that could be seen. But in that negative arena during COVID, aviation traffic took a huge hit. We all know that, not just here in North Carolina, but across the country. And that really hurts certain areas of the state because of their dependence on business travel, which hits hospitality and all the rest that is associated with that business travel. We simply haven't seen that come back. Mike, I think you would even agree that even in Charlotte, that's still kind of a weakened area. The fact that COVID's kept Cory at home in New York and not here with us is another example of how business travel is not currently happening. So that's been a negative we've seen across the state. All of this being said, this has led to a higher level of scrutiny. I won't get heavily into how the rating agencies have been doing and the items they've really been looking at for those of you who are offering public debt. I think Cory's already hit on that in great detail. But we have some other regulatory boards here in North Carolina. Who's heard of the LGC? So not a negative, but we have the LGC here in North Carolina. They have to approve all debt, whether it's public or privately issued, as you know, except for some federal grant money and some equipment type deals that are 59 months or below. So there's been a lot more scrutiny, and rightfully so, both in the airport and general government sector, to make sure that even if the needs are there and we are having to issue debt publicly or privately, that everybody's in good enough fiscal shape during the hard times that we've all gone through, that you were able to do that appropriately. The banks, which I'm getting ready to get into next, they were the same way. So the banks were a lifeline for many entities across the state when public access wasn't available, or for those that have always issued in the bank market. And what we saw is North Carolina being one of the strongest credit states in the country, and many would argue it's because of the oversight of the Local Government Commission, that people were still willing to lend here. And because there's an understanding that we will pay our debt in North Carolina. And so we saw most of the banks, we saw one or two close their books temporarily, but most of the banks were still willing to lend to the appropriate entities that had a need and had the appropriate plan in place and had the appropriate credit that they needed, credit risk factors that they needed to get those bank placements done. We saw a lot of short-term notes ahead of potential federal programs that you had to build it first and then you get the money back, grants and the like. So we saw a lot of short-term notes based upon that. We saw a lot of draw programs, which is a cash flow method. Mike uses it very effectively in Charlotte, and so does several other of the airports in the state. But it's a great tool, and the banks are willing to lend on it, to not borrow everything up front and to just spend the money as you need it. So as the bills come rolling in from whatever contract you have entered into, you then spend the money or borrow the money to pay those bills. And that's all done ahead of any kind of permanent takeout. Now the LGC does have rules about what your credit strength is to enter into a draw program. So if anybody's thinking about wanting to do that, please call me or talk to your advisor, and you can figure out whether you can fit into that silo that the LGC has created. Last thing I'll say before we turn it over, because I know we have several speakers in our limited amount of time, but what we saw, and Cory was talking about this as it related to the public markets, we saw the same thing in the bank markets. So we saw almost a 100 basis point increase in borrowing cost at the early stages of the pandemic to borrow in the bank market. I am happy to say all of that is gone. We are back to probably levels lower than we saw at the beginning of the pandemic, because the banks are hungry and need to get loans on the books. So this is a great time to borrow in the bank market if you need it. And I think that trend is going to continue. There's nothing that I've seen in the market that would indicate that that's going to change anytime soon. So, I think the banks are our friends in North Carolina when we need them. And Mike, that's really all I had to say today. Any questions?
Excellent. Thank you, Jeremy. So again, I think another testament to the strength and resiliency of the state of North Carolina and our airports and our communities, who really are amongst the strongest in the country. And I think you can definitely see that in the numbers and our continued access to the capital markets and to the banking system, which we're all thankful for. Okay, thank you, Jeremy. Dr. Crumpton, as Lee County Manager, you oversee the Lee County Airport. You helped create a special airport reserve fund. Can you help discuss how the fund came to fruition and how it helped your county, Lee County, weather the storm during the pandemic?
Okay. We have a unique situation in Lee County. The city and the county agreed to set up an airport reserve fund for all property taxes generated at the airport. So I don't know how many of you all can say that all your property taxes generated go back to the airport, but we can say that every penny that's generated there goes back to the airport. So it was created in 2003 when the new airport was built in the northern part of our county. And I serve on the Airport Authority board along with the city manager and 5 other folks. And we run the airport like it's a business. The 5 other folks that are on there are all business people. But the Airport Reserve Fund not only helps with capital, it was set up really to help with all the matching that we do with the state and federal grants, but they can also draw down the reserve fund for operations. So during the pandemic and also in the recession from 2008 to 2011, we drew down the reserve fund to cover operations. So even though for about 90 to 120 days after the pandemic started, we had some loss in revenue, we were able to cover that with the reserve fund. So it's a unique situation. We've had lots of phone calls from other airports asking us how we did it. It's a lot easier to give up that revenue when there's not a lot of money. So in 2003, we didn't have a lot of assets, so there was not a lot of money being generated. But now we generate about $300,000 to $400,000 a year, which may not sound like a lot of money to the larger airports, but to a small general aviation airport, that's a lot of money, and can be the difference between us making and breaking our finances for the year. Quick comment about the LGC. I've got kind of a different viewpoint on the LGC from being on the county side, but they do a great job in managing debt. And at our airport, the largest bank lending money to the airport is the county. So they're not in the private, they don't go out in the private market a lot and borrow money, but we lend money to the airport. And for the county, it's a great return for us. Right now, interest rates are so low, I'd rather loan the money to the airport and get 2 to 3% interest back to us, and then to try to invest that money somewhere else. So even though the county lends them the money, we still have to go before the LGC to approve it. So it's kind of interesting. I'm sitting there before the LGC. I'm not only the lender, but I'm the borrower because I was the treasurer of the airport as well. So unique relationship. But I will tell you also that from the county perspective, it's difficult for an airport or any enterprise type fund to borrow money because they're used to seeing fund accounting. So it's a cash basis versus an accrual basis. And so when you throw in an airport and all the depreciation you have of your assets, they see this huge depreciation number and they're trying to correlate that to your cash reserves to say, do you have enough money to replace your assets? So you have to kind of think differently when you're speaking to them, and it really helps to have a financial advisor with you. We used Davenport the last time we borrowed money, and Davenport Associates, and they're also the county's financial advisor. So it went a lot easier having somebody from a third party explaining cash flow and assets and all that other kind of stuff than having the guy that's borrowing the money and lending the money up there trying to tell them how great a deal this is. So, but anyway, I want to thank Bob Hughes for nominating me to be on this panel. So thanks, Bob.
John, thank you. John had to drive himself up from Wilmington. I think he's attending another conference this morning, the Conference of County Commissioners or something to that effect.
County commissioners are down there meeting.
So we appreciate you making time for us and sticking to your original commitment. We appreciate Bob for volunteering you to be up here, and safe travels when you have to go back to Wilmington. Just real quick before we move on to Dan, John, so when thinking about your special purpose airport reserve fund, how much was that and how did you determine the amount that it needed to be?
How much the money that we like to keep in it?
Yeah, how much, like what's the fund balance in the fund, and how did you determine that that was the appropriate amount?
Well, actually, for the airport, there are two different fund balances. Obviously, they have their own fund balance, which we use the 8% that's suggested by the LGC for local governments. But we try to keep a minimum of $150,000 in there because you never know what grants may come from DOT, and you want to have that money to be there for those matches. Another, have the statute and the agreement here in my hand, but if the reserve fund was not enough to cover any matches from the state, the city and the county have an agreement to split the remaining amount 50-50. So, obviously there's a lot of local government commitment that helps, the airport do whatever it is they need to do, and it's a unique relationship and commitment. And our boards, the city council and the county commissioners look at this as economic development. That's how we sell each deal that we're doing. And the airport is a vital link for economic development. So classic example is one of our biggest industries is Pfizer. Last time they did a major expansion, they probably flew in and out of the airport weekly. And without that airport, we may not have gotten that expansion. It was a big deal, had meetings there at our new terminal building. So it's an easy sell to the commissioners when you can translate it into other tax base that's being generated that does help their bottom line.
Excellent. Well, I think, for us, the big takeaway here is just airports of all sizes, big and small. Obviously, in Charlotte being a large airport, we've got a number of reserves that we have to maintain in order for us to issue debt as promises to investors to make sure we remain fiscally strong. But airports of all sizes, I think, really should, to John's point, perfect testament to the importance of creating these financial reserves. So, John, thank you very much for sharing your story on that. Last, we have Dan. Dan is the executive director up in Burlington. Thank you for being here, Dan. I understand that Burlington had quite a different experience during the pandemic.
Yes, we did. First, I'd like to challenge John. You're going back to the commissioners' meeting today. When you meet up with Brian, my manager, share some of that information with him, please.
I'll hand them this.
That's some good stuff. Thank you. But seriously, Brian is a great supporter of the airport. So, yes. And we mentioned LGC earlier. Back in 2006, our airport took on a project that was unheard of, unprecedented for any GA airport to do. So LGC became people on a first-name basis with us. And over the years, they have been very good in guiding us and working with us and, quite frankly, keeping us in line. But it was challenging at first because we were doing something that had never been done before. And so, yes. But things were different at Burlington than most airports. It's one time when I'm glad we're not commercial, but GA, because we didn't have all the commercial flights to lose during that time. I thought yesterday as I was listening to the discussions on being resilient, being prepared, and Mike Langeth really impressed me when he talked about the 300 and I think it was 60 employees, and he kept them busy. I think he said he had a policeman out mowing the grass and doing landscaping, but he kept them busy. So the family type atmosphere that he has with his employees, I thought was very important and something that we should all think about doing. In Burlington, when the pandemic hit, transit traffic stopped. There in our terminal building, there were days when myself and one guy at the front counter were the only people in the building all day long. There was no transit traffic coming in. Heidi was working from home. I was working in the office. We would switch back. I might work from home and she would work in the office. But Burlington's a little different than most GAs. Sometimes I would suggest to you developing your airport something like a diversified portfolio. You think about when you invest in stocks, you're investing and diversified. So the airport campus should be diversified as well. While our FBO doing the fueling was not pumping gas, he also has a charter business. First thing he did was get a contract to fly his jet to Denver, Colorado every night, 6 nights a week, hauling COVID specimens. He had to hire more pilots to do this. He's now taking on a second jet to do this. So while he wasn't selling fuel to transits, the man had to hire more employees to take care of a new contract, a new business that he's still doing right now. The flight school slowed down to about 40% of their normal students for about 6 to 8 weeks. And then after that, picked right back up. They're wide open. They had to hire more instructors and get another couple of aircraft. So they now have 10 airplanes, 10 full-time instructors, some part-times. So they're busy as can be. And so they started out with the pandemic of doing online classroom work, but in no time they had the students back at the airport and wearing masks and in the airplane. So they were busy as can be. So when people stopped flying their aircraft and parked them because of COVID, what did they do? They brought them to the maintenance facilities to go ahead and get their annuals going, getting work done. Our maintenance facility there is 2 months behind booked right now, and have been through the whole COVID thing. So It's like we're talking now about we need more maintenance providers on the airport because this guy can't keep up. So the engine guys, the prop guys are as busy as can be. Also, at Burlington, we have LabCorp. LabCorp is one of the largest laboratory testing companies in the world. Their home office is in Burlington. They have 9 aircraft that are dispatched every night, flying dedicated runs all over the East Coast of Florida to Chicago. Well, what happened with COVID? COVID testing, they had to double their normal flights. So when we looked at our fuel flowage for the month of July of 2020, it was the largest month of fuel flowage in my career, all because of COVID. So you don't want to brag about what COVID did these things, but because of the diversified portfolio of the airport itself, of the campus, of what's going on there, our people had to get super busy to provide the services that were needed. We have different, we had Civil Air Patrol. They had to continue their training and their emergency preparedness. UNC Air Care, medical transportation increased. So I guess I want to share with you all, and thinking about your small GAs as we are, more than just pumping gas to the transits, more than just your tenants, but a diversified campus supporting businesses and your community. I think right now there are 140 people that come to work there every day. And so it's about a community, but it's about diversifying.
Great, thank you, Dan. That's definitely a good story, one you don't hear too often, especially the pandemic. It was very difficult for most of us, but Dan experienced some great success up there. And I think being diversified is something that we can all appreciate. Airports of all sizes. Dan, I just would like to ask as a follow-up. Do you work directly with like your local economic development folks to help you identify opportunities to how you might diversify some of the business base that might be able to use the airport? And are those users specifically, are they aeronautical users only, or do you also have some non-aeronautical opportunities?
Everyone on the airport is aeronautical and a lot of different things. Missionary Air Group, the different maintenance operations, things like LabCorp, they're all aeronautical. Our economic developers, Alamance County has an economic developer through the Chamber of Commerce contract, and the city of Burlington has an economic developer. I'm sitting in my hotel room last night, emailing with him. They contact me almost daily. We stay in communications. Amanda calls it the dream team. So I'm very fortunate. We have our economic developers, we have our attorneys, we have our county manager, our city manager, but we stay in contact almost daily and working to bring things there, yes.
Yeah, so it really is a team approach. Thank you, Dan. That's a great story. Jeremy, I'm going to kind of kick this back to you. You had talked about the LGC, the Local Governments Commission. I'm not sure how many municipalities and cities you represent, but I know you represent a lot. What are you seeing from the LGC in terms of any concerns that they're communicating to you in terms of potential future impacts on municipalities' access to the banking system?
Yeah, I think they've been great. There was serious concern in the beginning of the epidemic or pandemic, and that scrutiny went down to a microscopic level. But I think now they see the recovery. They see that North Carolina has done so well compared to others. They're great partners to work with, and I see them now with a much brighter outlook on the future. And I see at this point no impact to raising debt due to COVID reasons or any of the rest. So I think everybody's looking at the recovery, looking at it very positively, and no pushback on issuing debt.
Is there any sort of tether, considering the state of North Carolina being a AAA rated credit entity, and I know that they evaluate each credit on its own merit, but given the strength of credit in North Carolina and the role of the LGC, do you think that puts North Carolina airports and communities better positioned to be able to access capital at cheaper rates than if that didn't exist?
Yeah, I would say absolutely, particularly on the private placement side. That is absolutely true. On Cory's side, on the public offering side, it really drills down into what actual rating you get on each particular offering, which is pumped up because of how good North Carolina credits are, and the fact that because of the way our the legal aspects of how the LGC operates and the ability they have to raise your taxes to pay debt. So the treasurer of the state can always come in and say, you're raising your taxes to pay this debt. So the national view of North Carolina, because of some of that power of the treasurer and the local government commission, I think it rises all ships due to that.
Good deal. So as a follow-up, Cory, from your perspective, from the national perspective, you heard what Jeremy had to say about access in North Carolina and kind of how investors consider North Carolina municipalities and their issuance in a favorable way. Do you have anything to add in terms of what makes North Carolina unique or specific?
Yeah, no, I completely agree with Jeremy. We're an active both in the bank market and the capital markets, that I would echo the sentiments that he said. I mean, I think that North Carolina generally, as a state, has the high credit ratings, the importance of that. The LGC is an important component, but I think when you look at the airports, they're all fundamentally very kind of strong on their own right. And I think that, as Jeremy mentioned, the credit specifics are what really can drive the ultimate pricing, and having higher rated airports in the state of North Carolina is helpful. But I think the other part of that too is just that if you look at kind of the recovery from a national perspective, the North Carolina airports in large part have significantly outperformed the recovery that we've seen in other areas. For example, on the West Coast, where some of the airports there are international hubs, more reliant on business travel, those have kind of lagged. And Charlotte, Raleigh, and kind of some of the other larger medium hubs in the state have done very well. And I think that trend will continue as the recovery has predominantly been focused on the leisure travel, the connecting hubs, kind of obviously, Charlotte, for example, American kind of pulling flights in, increasing the flights through Charlotte and DFW. And I think that that's just a testament to the airports within North Carolina. And from a market access standpoint, I think all airports nationally, will fare well. But I think that, as Jeremy said, the North Carolina airports, from a pricing standpoint, both in the banking capital markets, are doing very well now. And I think that trend will continue going in the future.
Certainly, we hope that continues. I don't have any reason to expect that it will not. Dr. Crumpton, just kind of circling back, and we're talking about our unique experiences and how we emerged from COVID. Hopefully we're emerging at this point. Can you just share with us maybe just a couple thoughts in terms of some things that maybe Lee County did in terms of, or what you couldn't do in terms of the impacts of your, revenues, expenses, kind of anything that you all saw from an operational standpoint, fuel flowage, or kind of how did that all impact you all, and how are you doing today?
Well, I would tell you that, our downturn was only about 90 to 120 days, where, the airplanes didn't fly, and no one came to see us. But then all of a sudden, it just seemed like the switch turned back on, and especially from an economic development standpoint, we've had a lot of visits in Lee County from the pharmaceutical areas across the country, and we're doing really well. It's interesting, we've heard some things about the tourism industry and that kind of thing. We don't have a huge tourism industry in Lee County, but our hotels are full. And most of that has to do with construction work that's being done with new manufacturing plants. So our economy as a whole had recovered well. Our sales tax revenues are up about 20% year on year for the county, and that translates into the airport revenues are up as well. So it's hard to explain when you're sitting before a board and trying to say, well, our revenues are up, everybody else's are down, and we're a winner in this thing, and other people are losers, and it's very difficult to explain. But it comes back to we're getting a lot of growth spillover from the Raleigh area. RTP is companies are coming down to see us now. And it doesn't hurt that Bob's a former economic development director running an airport now, so we have this business feel when people come in, and you know, you have to ask Bob, but I think that we have a lot of traffic tonight now. Last board meeting I was at, I was sitting there just enjoying watching the planes take off and land, and not paying a whole lot of attention to the meeting, but you know, we're, like I said, we're very fortunate. It's hard to explain, but you know, financially we're doing real well, and the reserve fund, you know, held us over for that, you know, 90 to 120 days. We took some money out to make sure we paid the employees. Plus we had, you know, a couple of the grants that came through the federal government and the county to help us through the CARES Act and loans and that kind of stuff that didn't have to be repaid. So, you know, we played the game well, and we're in good financial shape right now. So we're looking forward to the future.
Well, very good. Well, thank you again for sharing that story. And I'm reminded too, I mean, whether you're a big airport or small airport, just the importance of engaging the economic development community and all your stakeholders to make sure that you're really looking at all those opportunities to explore and examine not only traditional aeronautical development, which even as a financial type, I'm the CFO at the airport, so always looking for an opportunity to turn a penny here and there and try to be creative. But in all seriousness, those aeronautical opportunities obviously exist, and you know it's a growing component of our economy here in North Carolina. But really, it's also looking at those non-aeronautical opportunities to continue to give us the opportunity to diversify and make ourselves less reliant on just traditional commercial aeronautical activities. So, so thank you, panelists. We've got a few minutes left here. I did want to reserve some time. We've got a great panel of experts, and they want to make themselves available. If you all have any particular questions, anything going on at your airport that you wanted to share. Again, the topic again is financial viability. And so I kind of open this up and invite any questions for the panelists. I know it's early. Don't be shy, everybody. Yes, sir.
Just a quick question for Dr. Crumpton. The taxes you talk about that go into the fund, that's generated just off the airport, is that correct?
Yeah, anything that's inside the property line at the airport. There's not much outside the property line, so everything is pretty much contained in our property lines. So,
And I assume that you guys have probably executed your grant assurances as well. If you guys have accepted federal grants, then you've executed your grant assurances, right? Mm-hmm. So requiring you to keep all that good, well-deserved revenue on your airport, right, as a condition to accepting those federal grants is a very important point. Okay, anybody else have anything for our panelists? All right. Well, that concludes our session for this morning. I did just want to share with you all that there's a coffee break with the exhibitors. Ask that you take time to go visit the exhibitors. And this is the last coffee break in the conference. And I would also be very remiss if I didn't want to one more time put a shameless plug for my friend Mark Webke, who's putting up $10,000 of his own money to continue the furtherance of aviation education in the state. He's a coworker of mine, a close friend, and he's got a heart of gold, puts his whole life and passion into aviation. So I'm really proud and happy to call him my friend. And I'm sorry that he's not here for us to shower all this. And when we go home, don't say Mike said nice things about him, because the finance guy and the planning guy sometimes don't really see eye to eye on everything. Yeah, I'll be changing my tune. So, but when he's not here, I can share those thoughts and sentiments. But please consider participating in Mark's $10,000 match program. So, okay, with that, let's break, and I hope you all enjoy the remainder of the conference.